just got inflation numbers this morning, and the numbers are not so great, but they're not so bad either, right? There's good and bad things that we're going to talk about what you should take away from this inflation report. We're also going to talk about, is this the beginning of a new bull market? Because everybody's been asking us like, yo, is bull market here? And we want to finally address that question today. So Newski, let's get right into it, bro.
Yeah, so I see you're in the jungle right now, so I don't want to waste no time, bro. I know you gotta survive out here, so let's get right let's get right into it. All right, so right now you guys might be thinking like, yo, inflation dropped to 4%. That's amazing, yada yada yada. Yes, we're not gonna downplay that, right? Yes, it is a very big drop because it was 4.9% in April. It went down to 4%. But here's the thing. Core inflation is still high, right? Core inflation is still not exactly where we want it to be. So when you look at it, it says while the rate of inflation is declining, it's not actually clear whether it will be dropping to 2% anytime soon. And that's because core inflation is still 5.3% year over year. Core inflation essentially excludes anything that's not volatile food or gas price related. Because obviously we know, like, I think we mentioned it last time, I paid $7 in gas just this last week, or a couple of days ago, bro, in the weekend. So gas prices go up and down all the time, which is why they exclude it. And core inflation did go up 0.4%. So like, it's not necessarily the best news that like it went up, but it's also not the worst news. It just means that things could still get sticky.
Yeah, and then, you guys got to also realize, like, even like OPEC, right? OPEC, they cut gas production. They just talked about that. It was either last week or the week before. That affects gas prices, and that's why we say like it's volatile. It's stuff that we can't really control. That's outside of the U.S. So to have it constantly thrown off our numbers, it's better to look at the measure, which the actual Federal Reserve said that they prefer to look at that core inflation number because it's more important. We can't control what goes on overseas, right? We got to worry about what's going on in this country.
Yeah, and this is another article I just wanted to highlight. But basically, once again, guys, like, we understand that when you look at food prices, it's still not cheap to buy food, right? And we explained inflation to you guys earlier. It doesn't mean that gas prices and food prices, everything we're talking about, is just going to come down. No, it just means that it's going up, but at a slower rate. That's all inflation is. It doesn't mean that all of a sudden things are going to come down 4%. That's not what inflation is. So just wanted to make that very, very clear for you guys. But there's something else, right? So when you guys think about it right now, this right here is something to look at. Just once again, this is a chart showing you monthly changes in the CPI. So if you notice, it's just been going up, down, up, down, up, down. And we're at a point where it's going to be interesting because we're not too far from 2%, but based on the data that is out right now, it's going to be very important to see what Jerome Powell actually says, because everything he's saying is based on this data plus other things. Now, something else I wanted to show you guys is the wage graph, the whole salary wage, right? So when you look at it, this is actually pretty cool. So the title here says pay raise just caught up with inflation for the first time in 2 years. So Rel, do you want to explain like the whole gap with inflation and wage and how that's usually impacting people?
Yeah, because remember, inflation, it's eating away at your purchasing power. So the problem is you may be making money, but if inflation is higher than the increase in your wage, then you're really low-key losing money because your purchasing power is still decreased, it's still deflated. So we need wages and inflation to be on the same page. We can't have inflation be more than your wage increases.
Bingo, exactly, bro. And this part was actually pretty cool because in the month of May, prices overall rose less than expected, 4% from May 2022, right? In comparison, average hourly wages were up 4.3%. So we beat them by 0.3%, right? It's not something to be like, oh my God, it's crazy. However, it's just good to know that at least we're keeping up, right? We're not completely getting destroyed. So that's something that's actually interesting to see. But I think there's other things. Ro, do you want to kind of show this stuff that you were talking about and share your screen? Because I think interest rates is something that's obviously very concerning and things are changing up a bit, right?
Yeah. So if anything, I could bring up the Fed Watch tool if you want. Yeah, I could show that real quick, briefly, just to see what's been going on ahead of basically where is it right here? Okay, so ahead of the Federal Reserve meeting is when we're recording this, right? So we'll see what Jerome Powell wants to do. But in June, we see that, like we mentioned on Monday, we mentioned that in June we're not expecting a raise. in the interest rate, right? But we expect the raise to come in July. Now, the inflation data that just came out this morning changed this slightly. I know Monday we told you guys about how they're expected to not raise it in June, but in July we're expecting a raise. Ever since CPI came out this morning, bro, we are expecting a raise in July, but just not a 50 basis point raise. Right.
I think last time we were saying it might have been 50. It was a possibility. So remember, we keep on telling you guys, data is going to be a key factor in all this. So it's going to constantly change, and we want to keep on bringing you the latest news possible, because obviously things are changing by the minute. So it's good to understand what's happening. And core inflation is what people care about, not just inflation.
Yep, and like Newski said, it's sticky. Core inflation is not solved yet. That's why, yes, we might not raise it on Wednesday. You guys will know by the time you watch this. But July, they're expected to raise, at least at the time of this recording. But luckily, ever since CPI data came out and we saw such a great improvement, we're not expecting them to raise it by 50 basis points. We just might get like a little 25 piece in July. You know what I mean? So then that brings me to the question that I really wanted to cover in this episode, which is like, all right, did Jerome Powell just do the impossible? Did he just bring inflation down from 9.1%, getting closer and closer to the 2% target by raising interest rates to the highest they've been since the early 80s and avoid a recession?
How? See, it's weird, bro, because what do we have, like 10, I believe, straight months where we increased the rate?
10 straight rate raises, yo. Yeah,
so it's like, yes. So far, it looks like we're in the clear. It's kind of weird because I am skeptical of this. I'm very skeptical of this because I think the job numbers are still wrong. I don't care what anyone says. I'm just not buying it. So like those are fine. Our wages are increasing. We're not seeing like we're gonna hit a recession now. Stock market, like NASDAQ is ready to break out. S&P is doing great. Like we have companies hitting all-time highs, like tech companies that always were leading the charge are leading the charge again. So it's weird. Like I'm actually interested to see how consumer sentiment is now as well, because right now it seems like he's doing his thing.
It does seem like he's doing his thing. I can't lie. And so it's like, what is the thing that could bring the market down? And inflation was the thing that caused the bear market. We just had a bear market. And I'll even share my screen again, but just real quick, right? We just had a bear market based on the fact that inflation was like sky high, and the Reserve had to get really aggressive to bring inflation down by bringing their rates up, quantitative tightening, and all that. Now that we see that the inflation problem has come to pretty much a close, at least so far, it looks great. What is the cause for us to be going back down? And the only thing that could bring us back down, I would say, would be if we enter a recession. But I don't even think if it's a mild recession, we would go down. It would have to be a recession that's really harsh, like a harsh recession that nobody anticipated. I think that's the only thing that'll send the market down, because I think the market has priced in a recession. And if anything, I think they priced in a harsh recession. And they're seeing that, right now, it doesn't even look like you're going to have a harsh recession this year. Now with the data, not so far, it doesn't look harsh. It might happen, but not harsh. And I think that's why the market is continuing to rally.
Yeah, and I think people have money left over still. I think money is still there. We still have a good amount left in our banks from other people. We're not spending a lot. So that's one thing. But I think something that could potentially cause some type of like worry is a credit card debt. So I think that is something to be just keep your eye on that, because I think the more we continue to play with the whole debt ceiling and the more we take on credit card debt, I think it might influence people depending on what happens. So that's something I'm keeping my eye on as well, just as a possible factor that could actually really hurt us.
Yeah, I would say something at the end of the day is I also look at like delinquencies, and delinquencies, they have picked up, but they're not at alarming levels. And yes, that could always spiral out of nowhere, especially if unemployment picks up, because now unemployment picks up, they don't have jobs. How do they pay debt?
Yeah, but that's why I'm keeping my eye on it, just to see like what we're doing with the credit card debt and also the job market. Because if it's good, great, right? I think we'll be okay. But if it's not, that could get sticky.
Yeah, because right now the job market, the labor market remains strong, and
it does.
And these are like, this article it actually came back out. It came out back in 2022. So you could kind of ignore this column where it says most recent quarter, but it's still like cool to look at, because this is basically the percentage change of economic indicators that we look at when we're trying to decide, are we entering a recession? So you look at things like real personal income, non-farm payroll, household employment, real personal consumption, wholesale retail sales, and industrial production. These are things that we look at. And right now, these things are not at alarming levels. If you were to actually look at it, like even like, for example, I brought up real personal income. Now, real personal income has gone down from what it was deep in the pandemic. Like this is like February 2021 up here. It came down, but it's still decent compared to like where it used to be. So our personal income is still at a solid level. It's just that inflation was so high that it was hard to realize that. So obviously, like we talked about that earlier in the episode, we need them to be on the same accord. But our real personal income is doing just fine. This is kind of showing that too when it comes to personal income. So right now, I don't really see a harsh recession. Thing. Like we still have money to spend. Our savings as well is not at a place where it's like nobody has savings. Now it has come down. Don't get me wrong, we don't have as much savings as we used to as a country, but this points to me at a mild recession until proven otherwise. And the market, I think, is rallying so much also because of the bet on AI, and that AI is going to increase GDP for us over the upcoming 5, 10, 20 years. Right. So I think they're betting on AI, and that alone could pretty much put us into a bull market. But if AI is a failure, which I don't think it will be at all, then we'll come down hard.
So, okay, so basically, I think we're kind of saying the same thing, right? So actually, kind of. So you're saying AI is going to be a huge factor. I agree with that. I think it's going to be extremely big for us to just take this and ride the wave and continue to develop the technology, for sure. If something happens to AI now, that could hinder stuff. I don't necessarily see that happening. Now, is this going to be a mild recession or like a crazy recession or whatever? I mean, we have to see what happens. I think we actually will be fine depending on how we go. Overall, if I had to say, I think we'll be just good. Based on the data that we're seeing right now, there's nothing that's really seriously alarming, right? Like, I think for the next year or so, we'll be okay. Now, can we continue this all-time high stuff? No, I don't see that. Like, I think we're gonna probably have to come down a little bit, because of how do we constantly continuously keep on beating all-time highs, right? I think that's something to keep your eye on as well. But overall, I think based on numbers right now, if we're able to get the core inflation down and make some damage on that side, I think we'll be okay.
Yeah, and just to clarify for those watching, like, because the S&P 500 and the Nasdaq, they're not at all-time highs, but like he's talking like individual companies.
I'm talking about individuals, yeah.
Nvidia, Apple, we've seen these companies hit all-time highs, and more coming. So eventually those companies will have to come down, and they have been carrying the market. So when they come down,
others will pick up.
Yeah, and that's true. But then again, you also see small cap stocks breaking out.
Yes.
So it's like maybe even as big tech comes down a little bit, the smaller companies are coming up. So it might even balance out at a certain level there too. So it's tough. I don't see anything bringing us back down, and I'm looking forward to see how the year finishes out. I don't know, bro. I'm not trying to say we're in a bull market, but I'm definitely saying we're not in a bear market no more.
Yeah, I mean, we beat the bear market, right? For S&P, we're already out of it. For Nasdaq, we're already out of it. So, like, numbers wise, we're sticking strictly to numbers right now, and we look just fine. But let us know what y'all think. You guys think we're gonna be in a recession? Y'all think we're gonna come back down? Do you think we escaped? You think Papa Powell did his job? You know what I mean? Like, the whole team held it down, and we're okay. You think Terrell will survive from the woods? It all depends. So let us know what you think. If you're still watching, we appreciate you. Thank you. Please make sure you like, comment, and subscribe to the channel. Plus, hit that little notification bell because we drop
2 videos a week.
And you don't want to miss them. Check us out on Monday. Until then, peace.
Peace.
Soundstripe.